welcome to EconVersations. I'm your host, Dr. Dan Sutter with the Johnson Center for Political Economy at Troy University. The U.S. Export-Import Bank has been providing financial assistance for American companies selling their products and services internationally for over 80 years. Earlier this year, the bank's authorization to operate was not renewed by Congress, and so the bank has been suspended its new operations. Critics call the bank an example of corporate welfare, while its defenders claim that the exports supported by the bank create over 100,000 jobs for Americans. What does the bank do, and does it constitute a case of crony capitalism? Joining me on EconVersations today to talk about the bank and cronyism in general is my colleague from the Johnson Center, the Associate Director of the Johnson Center, Dr. Dan Smith. Dan, welcome back to the show.
Thank you, Dan. It's a pleasure as always.
Well, we're going to be changing things up today, and you're going to be asking me the questions to begin with here about the Export-Import Bank. So why don't we get started then?
So as you mentioned in the introduction, a lot of people describe the XM Bank as a form of cronyism or corporate welfare. And obviously, if that's true, that is a big concern. Can you tell us a little bit about the history of the XM Bank and its current status?
Well, the XM Bank was created initially in 1934, part of the New Deal legislation to support exports to the Soviet Union at the time, and then was expanded and authorized in 1945. So it's been in existence for more than 80 years. And at this point, its charter has to be renewed or reauthorized periodically. Its authority to operate has to be renewed by Congress periodically. And that ended at June 30th of this year, and Congress chose not to reauthorize it. So as of right now, the bank is no longer undertaking new operations. It's continuing its existing contracts or existing deals. And Congress is working, and it's not clear as to whether or not they're going to work out a deal to bring the bank back at some point in the future.
And so the mission of the XM Bank, from my understanding, is to support exports from America. What type of benefits, or how does it actually support exports?
Well, the bank has four main tools at its disposal that it uses. One is loan guarantees, and then also loans. So it can either make a direct loan to a company that wants to purchase American products, or they could guarantee such a loan. So another party could make the loan, and then their loss would be guaranteed. And then, which is a smaller issue, they can also offer insurance to lenders, and then working capital. And this just shows you the breakdown in terms of billions of dollars, the operations of this of the bank, I think in 2013. So the loans and loan guarantees are by far their main mechanisms for trying to support exports.
Yeah, so can you describe in a little more detail how actually do loan guarantees or even insurance, I mean, this is billions of dollars going into these programs, how do they actually support exports from America?
Sure. Most business transactions are actually, businesses finance most of their day-to-day operations with lending. So if a company did want to buy, like, say, several $1 million worth of oil field drilling equipment, say, from an American company, they would take out a loan to purchase that. And the issue would be perhaps if that company was seeking to buy the products, the American oil drilling equipment was located in another country. If they had trouble finding a way to finance that loan, if they were unable to get a loan, then they'd be unable to purchase the equipment from an American company. So if there was a problem with the loans or ability to get loans, then that's what the Export-Import Bank is just supposed to be trying to step in and deal with.
Okay. What are just to give the viewers kind of a view, or let them know what are the economic arguments that justify these types of arrangements and subsidies?
Probably the biggest argument would be what economists like to refer to as a capital market imperfection. Capital markets refer to the markets where firms would go to banks or other providers of loans and attempt to borrow from them. So if you were talking about a company that's operating in a country where they didn't have very well developed financial institutions, or they didn't have access to the international capital markets, they might have some lack of ability to go out and get a loan to be able to purchase this equipment, as other businesses would. And in that case, then I think, if there were capital market imperfections, I think there would be an argument for the bank's activities.
What level, or how does this financing, or what level of exports does this financing support? Is it like all U.S. exports receive some financing through the EXIM Bank, or is it just a small percentage?
Well, that's a good question, because it certainly bears question as to how prevalent these capital market imperfections might be. And it might come as a bit of a surprise, but less than 2% of our exports by value are supported through these loans and loan guarantees and other activities of the bank. And in Alabama, it's well less than 1% of the exports of companies that are operating here in Alabama that are getting their benefits, or whose customers are able to get loan guarantees or loans through the Export-Import Bank to be able to purchase their services.
So it's just less than 2% of U.S. exports that are backed or financed in some capacity through the EXIM Bank. Of that 2%, are they large corporations or are they small businesses receiving that assistance?
There's a whole range of companies, because I mean, there's several thousand deals that might be handled in any given year. But many of the loans or many of the deals are quite large, and so it would make a big difference whether you're looking at companies, whether you're looking at the deals by numbers or the deals by size of the deals.
If it's just a small percentage of U.S. firms receiving these subsidies in some capacity for their exports, could you actually argue that perhaps these exports would have occurred even despite that assistance? So thus it could amount to almost a subsidy of foreign purchasers?
Yeah, it's definitely true, because it's simply because a foreign purchaser got a loan or a loan guarantee from the Export-Import Bank, there's no guarantee that that purchase wouldn't have occurred otherwise. The Export-Import Bank only identifies perhaps about 40% of their activities as directly motivated by, quote, competition. So even according to their own calculations, less than half of the deals are likely only allowing things to go through because they would face other competition. So certainly a whole bunch of these deals would actually occur even if the Export-Import Bank wasn't there. And then furthermore, there would be another case that if the specific deal wasn't going to occur because of the Export-Import Bank, it's quite possible that another American firm might have gotten that business otherwise. So if, say, Boeing didn't get, well, Boeing's probably not good. If say, one manufacturer of oil field equipment, their deal didn't go through because the Export-Import Bank wasn't there, there could be another manufacturer of oil field equipment that could step in and get that deal instead. So even in the cases where the deal goes through because of the Export-Import Bank was integral to allowing the deal to go through, it's still not clear that that deal couldn't have gone to another American firm anyway.
You alluded to Boeing as a potential recipient of the EXIM Bank's subsidies and assistance programs. What other companies are receiving assistance through the bank?
Well, it depends on, when we're talking about this, whether we mean the companies that are being able to sell stuff, or the American companies that are being able to sell stuff through the efforts of the bank, or the foreign companies that are getting are able to purchase stuff through Export-Import Bank guarantees. And I think if we look at the question of the foreign companies that are getting benefits from this, here are some of the larger ones. Pemex is the Mexican oil, the giant Mexican oil company. Emirates Air is an airline. Ryanair is an airline based in Ireland. So I mean, many of the bank's export loans or loan guarantees are going to companies, foreign companies that are relatively large.
So I've read that about 90% of the EXIM Bank's loans end up going to small businesses. Is that true? Yes, if you look at the loans by the number of loans, but if you look at the loans by the volume of loans, there's a completely very different story. So in this case, there are conflicting stories that are being offered in the news accounts, and to some extent they're both true. It depends on whether you're looking at the value of the exports, the value of the deals, or the number of deals. And then there's a further consideration that sometimes if a large manufacturer gets the exports, they will use some subcontractors.
And so even if a large deal goes to General Electric or Boeing, they might have some subcontractor firms, and some of those subcontractors might be smaller. So there's a question of whether you're looking at the companies that are being directly helped by the Export-Import Bank or indirectly helped.
So proponents of the XM Bank argue that it's creating thousands of jobs through these export assisted or subsidy programs. Is that true? I think most viewers would say that that would be a good thing, that we're propping up U.S. manufacturing, creating jobs here in America through this program.
Well, certainly jobs are nice for the economy, but I think sometimes in a lot of our economic policy discussions, we focus too much on jobs. Jobs are sort of like a byproduct of what we should be seeking. What I think we really want to have are businesses that are creating value to both our economy and the global economy. I think when an American business is able to produce a good or service that foreign buyers want to buy, are willing and able to buy, and they're able to afford to buy it, then that's doing a great service to our economy. And when you think of like the 98% of our exports that occur without Export-Import Bank assistance, I mean, those companies are definitely contributing to the economy, and they're hiring workers, and many of those workers, I think, make good wages. But it's more important that the jobs be tied to actual value creation than that they be sustained through subsidies, I think.
So economists always talk about the seen and the unseen. The seen being what you can actually visibly see from any government program, and the unseen, kind of the hidden consequences of that program. Is there anything like this in the XM Bank where there are jobs created in some areas, but there actually could be negative effects somewhere else in the economy?
There definitely are. There definitely are some instances of this, and you know, we have to take some of this into account here. So if we start with some of the large companies that are receiving assistance, one of the largest companies, or by far the company that's getting the most assistance here in the United States is Boeing. Over a period of 7 years, they captured more than 1/3 of all of the Export-Import Bank deals were to assist companies that were buying planes from Boeing. And so that sustained, obviously, probably thousands of jobs at Boeing. You know, again, assuming we don't know for sure if some of those jobs would have occurred. But the case of Boeing's exports of aircraft, I think, is very elusive. I think illustrates this whole issue of the seen versus the unseen. Because, let's see, let's skip ahead here. All right, you might have a slide that was missing here. So, well, in any event, one of the things that occurs in the case of Boeing was that a lot of foreign companies, airlines like Ryanair and Emirates Air, have been able to purchase aircraft using Export-Import Bank loans, and they've been able to purchase those aircraft at a discount. Essentially, they can get them cheaper than, say, an American airline like Delta or American or United would be able to purchase aircraft. Now, American airlines like Delta compete against some of these foreign carriers on international routes. If Delta has to pay full price for its by having to take out loans that aren't subsidized to buy aircraft from Boeing, and its competitors on these international routes are able to take out subsidized loans, then Delta faces unfair competition. And Delta in particular alleged that they lost 7,500 jobs due to a reduced amount of international flights that they were able to service due to unfair competition from the airlines like Ryanair, the Europe's leading discount airfare airline, and so that was a big problem. You know, there could be a loss of jobs. And I think I pointed out that the jobs that Delta or America's airlines would be losing would have been jobs that would have been tied to value creation. And I think those are the really important jobs, because it's those jobs that are really helping to drive prosperity here in the U.S.
One question that viewers may have is how's this all financed? From my understanding, the U.S. XM Bank does not currently receive appropriations from the government, and in fact is even potentially generating a revenue, I think something like $1 billion since 2008. How is this financed?
Well, those are really good points, and I think that they're part of the element of controversy over the current reauthorization debate. The first point that the Export-Import Bank does not get appropriations from Congress at this point in time is actually true. The bank operates through offering loans and loan guarantees, and in the loan business, at this point they are able to fund the new loans that they're giving out based on the loans that are being repaid. And so due to that, and due to the fact that they haven't made a lot of bad loans recently, they are able to operate and make new loans with basically the proceeds of loan repayments that are coming in. So that part of it I think is true, but it is somewhat a little misleading because the total amount of loans and loan guarantees that the Export-Import Bank has outstanding is over $100 billion right now, and that represents the potential liability of U.S. taxpayers. If those loans or loan guarantees go south, if the companies are no longer able to make those payments, that's the potential liability that the U.S. taxpayers would face. Mm-hmm. And we saw in 1987, Congress had to bail out the Ex-Im Bank because of losses that they had suffered on loans. So with loans and loan guarantees, a lot of times things can proceed pretty smoothly for a while, and while things are proceeding smoothly, it looks like you're making you're making a return. Subprime mortgages didn't go bad immediately, and so you can make questionable or high-risk loans, and it doesn't necessarily cause an immediate cost for you.
Mm-hmm. So I'm kind of gathering that asking whether the Ex-Im Bank actually promotes economic prosperity or not is actually a lot more complex question than most people realize. Can we take a step back and say what actually drives economic prosperity, and does the Ex-Im Bank hinder that, or does it support that?
Yeah, I think that's a good point, because I think we can get into a lot of the details, and if you think like, okay, well, there are job gains from Boeing here, but maybe Delta's hurt over here, it can be really hard to sort of get a sense of whether this is benefiting the economy overall. And I think when we do step back, we just ask the question of how is it that prosperity is generated in the country? And I think that that's ultimately tied to value creation. And when you're subsidizing exports, you're not creating value. I mean, so suppose, for instance, if I was running a oil field, I was making equipment for oil field exploration, and I wanted to sell like $10 million of that equipment to a foreign purchaser who wanted to develop an oil field, like say in Kazakhstan. If they could only afford to pay like $7 or $8 million for it, if the Export-Import Bank steps in and in effect by providing a subsidized loan helps cover the rest of that purchase price, then it's other Americans, other American taxpayers, other capital that could have been used to do something else that's being used to subsidize that. If the foreign purchaser could have paid the full price but simply gets a discounted price, then the benefits are going to the foreign company that gets to purchase. So companies like Pemex or some of the other companies that we mentioned. If the deal does occur because the Export-Import Bank guarantees, then it still ends up making us worse off, because in effect taxpayers are covering part of the extra cost. We're not actually creating value. We're destroying value in that process. And I think that's an important point to keep in mind, because when we start to think of aggregating all of this stuff and different components here and there in the economy, we can lose track of this. But when we step back and just say, how does value get created in the economy, and then is the Export-Import Bank doing something that's leading to value creation in our economy, I think we get a very different, I think a much clearer sense of why it is that its activities aren't helping our economy.
Okay, so let's say viewers are convinced now that the Ex-Im Bank does not contribute to economic prosperity through all the mechanisms that you just described. However, there are over 50 different countries with some version of an Ex-Im Bank, and they're supporting and propping up their exports, including to America. Even if you're correct, if the rest of the world is engaging in these types of subsidy programs, would it put us at a competitive disadvantage to end our own Ex-Im Bank while these other banks around the world still operated?
That's a really good point. And so again, you're right. Somebody could agree with everything that's being said, but still come back and say, would it make sense to unilaterally disarm in this case? If everybody else is doing it, don't we need to do it just to balance the playing field? And I certainly think, you know, if you're a U.S. company and you're competing with, you're trying to make sales to foreign companies, and you know your competitors located in China, Korea, Japan, or our 50 trading partners that have these export-import banks, if your competitors are able to work out a deal with their country's export-import bank to help cover some of the buyer's costs, you're going to feel really disadvantaged. And I certainly could understand the feeling, the sentiment of American companies who would look at that and feel that they're facing unfair competition. Mm-hmm. But I think this is one case where our sports analogies, which often are very helpful in economic discussions, are failing us, because what we don't recognize is that the other countries, when they're subsidizing their exports, are making themselves worse off. And so if we join in, we're going to be jumping in we're going to jump in and create and destroy additional value. Other countries, when they do this, it's a bad idea. It's hurting their economies. If we respond in kind, we're hurting our economy further. So it really comes down to a sense of, if our trading partners want to hurt themselves to try to promote their exports, do we want to hurt ourselves just to try to promote our exports in response? And the competitive analogy makes it feel like, well, if we're going to lose the game, we really need to jump in. We don't want to lose the game. But in some cases in the economy, we have a negative, what economists like to refer to as a negative-sum game. And those are games we don't want to play. We want to stay on the sidelines with those.
Well, it sounds very costly, and we have over 50 countries around the world engaging in these types of programs. If they are so costly and a net cost to these economies, who supports them, and why do they exist in the first place?
Well, I think if you go back to the side of the companies like GE and Boeing, the American companies that are able to get these deals approved and are able to sell more of their exports, they benefit from that. And not surprisingly, GE and Boeing are two of the companies that have launched a significant lobbying effort to try to get the Export-Import Bank reauthorized here in 2015. And who knows? I'm not one to ask for prognostication, so I don't know if they're going to succeed in that effort or not. But they certainly are working very hard and spending a lot of money to try to get the bank reauthorized. Mm-hmm.
So overall, this sounds like a form of cronyism, right? So it is, as we started out, it sounds like it very much is a corporate welfare program.
I think it's a pretty fair assessment, especially since when you look at the stated rationale to help address this capital market imperfection. Since that argument really fails, because over 98% of our exporters are able to do this without assistance from the bank, then I think it is likely a crony capitalist or a corporate welfare program.
Well, can we dig a little bit deeper into cronyism and corporate welfare?
Yeah, and I know that that's a topic which you've written a lot about and done research. So why don't you explain to our viewers in a little more detail what we mean by corporate welfare exactly?
Yeah, so corporate welfare and cronyism is best described, or the best definition I could come up with is it's an unhealthy relationship, a closeness, so to speak, between businesses and politicians, state leaders, government officials, bureaucrats. And it manifests itself whenever politicians or government officials undermine the competitive market process in order to hand out special privileges and favors. So rather than having a competitive market system, capitalism, what you have is instead politicians interjecting themselves in between and saying, we're going to take tax money from some people and we're going to give it to these privileged businesses or this privileged special interest group that aren't available to everyone else.
What are some of the most prominent examples of crony capitalism in the U.S. today? I mean, I guess besides the Export-Import Bank.
Yeah, so I think some of the major ones, the obvious ones are like monopolies. United States Postal Service is a monopoly. You have subsidies programs where you actually subsidize particular companies and particular industries. You could have tax credits through economic incentive programs that tax money away from individuals and then grant it to specific companies to attract them to the state, or just provide some type of economic benefit to encourage them to expand. You can have protectionism, and that means cutting off international trade in order to favor businesses within the state or nation. A good example of this would be sugar tariffs. where you actually you prevent sugar from coming or sugar quotas. You prevent sugar from coming into the United States, driving up the cost of sugar in the U.S., and that's a benefit to the few large corporations that manufacture sugar in the U.S. economy. You could also think of kind of less obvious ones would be bailouts, bailing out some companies and not other companies, loan guarantees. So this is a big one in the financial crisis. The United States government actually provided loan guarantees to Fannie Mae and Freddie Mac, two mortgage companies. They'd buy up mortgages, and they actually held a very large share of the market prior to the financial crisis, and they were supported and they were able to offer lower interest rates, so they had a large share of the market because of that, specifically because the United States government gave them an implicit loan guarantee that they would be essentially bailed out in the case that they failed. One that most people don't realize is actually regulation. That there's many capacities in which regulation, which oftentimes hurts businesses, can be used by one business to artificially or to hurt their competitors. A good example of this would be occupational licensing. So a group of electricians can get together within the state and say, we don't want any more competition. How do we cut off competition? Well, the best way to do that is to create a lengthy and costly mechanism to become a qualified official electrician within the state. So you could erect these requirements in order to keep out competitors. So even regulation, which most people think all businesses hate, some businesses may actually favor specific regulations because they hurt their competitors more than they hurt themselves.
And these forms of corporate welfare certainly impose some costs on the economy by misdirecting resources, but there's probably a greater cost in terms of how people perceive the market economy, isn't there?
Yeah, there's extreme costs in what you refer to, like businesses are less attuned, less responsive to consumer demands. There's less entrepreneurship, less innovation. But more importantly, and I think what you're asking about is people look at the free market economy, even though there's rife with cronyism and corporate welfare, politicians injecting themselves into it, making the market less efficient, and then they see failures and they blame it on capitalism rather than on the crony system. So to the extent that these types of programs make capitalism appear like it's not working well, when in fact it's government that's not working well, will be probably the biggest costs of cronyism going forward.
Just what people even think of as a capitalism or a market economy, right?
Yeah, absolutely. My dissertation advisor, Pete Bedke, an economist at George Mason University, said regulating the market and taxing the market is kind of like taking Michael Phelps, wrapping him in chains and throwing him into the pool. And you stare at him and say, hey, he can't swim. Well, of course he can't swim because he's tied with all these chains and weights. But that's exactly the same thing we're doing with capitalism, is we're weighting it down with regulation, taxation, and we let it sink to the bottom of the pool and then say, oh, capitalism doesn't work. But capitalism doesn't work because of the market regulation being put there in the first place.
I think that's a really important point for our viewers, and I think for our country as well. Because I mean, a lot of people think that free market economies somehow are in favor of business, or we're just seeking to help businesses get handouts. But I mean, it's really not what we're into at all. In fact, I think if anything, our economists here at the Johnson Center want to see us get back to having a real capitalism. And because of all the great benefits and wealth and prosperity it can bring to us. So thank you very much, Dan. And thank you for joining us. Join us again next time for another EconVersations.